Hey everybody, welcome back to the channel. Today I want to go over the PM Silver Bullet on Friday, August 18th. So let's get started. Let's see what we see first. We have some relatively equal lows. Sell side liquidity right here. So normally when I see that, I'm looking for them to be traded back through at some point, but it is a great way to generate liquidity. So right now, for me, I need this to be broken for a market structure shift to go higher. Now, we did see some things in our group today, and we talked about some things. For me, this would be the high that I'd be looking for because I'm trading the Silver Bullet. If I wanted to get in over here earlier during this, I probably would have taken this as a short-term high here, cleared. Just mark this right here. Let's mark it on here. Short-term high cleared. Okay. And then you have a fair value gap here. And then you have a fair value gap here at the bottom, at the lower end as well. So you take a trade right here on the lower one, and you would have got a good trade set up there. That's not during the PM Silver Bullet. That's right after lunch. That's what you could have seen, could have done right there. But on the Silver Bullet hour, let's see what happens here. Okay, so for me, that'd be the market structure shift. I'd like to see this swing high taken. Now I'm looking to go long. I'm also marking fair value gaps, so I see a fair value gap here. Okay, and from this swing low to this swing low, that's definitely in a discount. So if price trades down here, I'm going to go long. Okay. I have to buy there, can't buy there. And you're like, hey, what about this fair value gap right here? You know what? And what about this fair value gap right here? Yep, that held price. Now it'd be an inversion. Yes, this would be an inversion right there. Not concerned about it. I wanted to see price come here. Let's pull our fib from low to high. See where we're at. We're in that optimal trade entry area, so you're going to have some violated PD arrays coming down in. So that's fine. I'm entering it optimal trade entry at a fair value gap. So I bought there. I'm taking my trade from here, and I'm just aiming for 1 to 2. Right? Where's my stop? Below the first one tick below the first candle, which is right here, and I'm aiming for 1 to 2. 3.5 handle stop, 7 handle target, aiming for this high. And let's just see what happens here. Okay, so that leaves a fair value gap right there. At that point, we would have taken partials right in here, and our stop had been break even, but I didn't. So I'm going to take a partial right here now, just to show you that we would have taken a partial there. And my stop, I'll move my stop so you can see where it would have been. Break even, +1. So let's move our trailing stop to right here. And I'm using this, not this so much, because it's only on closed candles. This is where our limit orders would have been. So now let's just see what happens here. When you've taken this trade, you could, since I'm already in a trade and I already took a partial, I'm not getting in again until this is closed out. Ideally, I'd wanted to get in there. And the reason you could have entered right there is because there's an inversion fair value gap right here as well. So that would have been a great trade to get into. So if it comes back down, I'll probably take a trade. All right, let's flatten this right here. Okay. If it hits that inversion fair value gap again, I'm entering a trade. Okay, because we're still, let's add this there. Let's take 2 right there. Take long at the inversion down below, and let's aim for, 1 to 3, right? Let's aim for this drawn liquidity up here. Where would I take my partials? I take my partials right here at this high. So let's move that down. Let's see what happens here. Alright, so we sell 1 there. We take our trailing stop and move it here to one tick above. At this point, I'm moving my stop because there's this fair value gap right here. Right, I don't want to see that get traded too, so I'm moving my stop right here to the bottom of that. Just because if it does, I don't want to take it since it's so close to the top. I wouldn't want it to come all the way back down and lose all of this profit. All about risk management. So I'm moving it on things that I don't want to see violated. That's where I'm moving my stop to. And I don't want to see this violated. If it does, then I want to be out of the trade, and that's where I'm moving my stop loss to. Okay, and there we go. I'll take this off. I'll take this fib off. Let's see the rest of the hour. Take our positions off. Alright, well, we saw that there were relatively equal lows. We waited for our, what we would consider a market structure shift to occur at the 10 a.m., the 2 p.m. time. Came back in, we had a fair value gap in this discount. We waited, we took that trade. We were aiming for 1 to 2 risk to reward ratio. We got it, we took a partial, and we got our TP hit. Okay. Price came back in, a fair value gap and an inversion fair value gap. We took another trade, aiming for the higher time frame drawn liquidity. We took a partial above structure here, about 60%. Moved our stop. When our trade went up to about 80 to 90%, we trailed our stop higher to where we would not want to see price trade back down to. And if it did, we want to be out of the trade to preserve capital, so we moved our stop loss deeper in profit. We eventually got our TP hit, and that was our 2 silver bullet trades for the PM session on August 18th.